Please go through this disclaimer. So welcome to this part 4 of the basic building block series. I hope you have gone through part 1, 2 and 3, which talks about what are base candles, what are momentum candles. Then it talks about the 4 basic patterns that we use, the RBR, DBR and so on. And the third part talks about how we mark zones and how we mark our entry and stop loss lines. So hopefully you've watched them and you have sort of mastered them, practiced them. Now let's take a look at what are the various factors that we consider while judging a zone. So this is the topic of this fourth part of the basic building block series. So there aren't too many factors to consider, but of course there are some of them which are quite important, and this is in terms of the structure of a zone that has already been formed. So the first factor we consider is how strong the imbalance was, which caused prices to move away from the basing area of the zone. Right. So for example, let us look at this demand zone. So here we have a drop based rally, drop, single base candle and rally. So you can see that the move out of the basing area was so strong in this one. It shot up over here, it gapped up next and again moved up really strongly up, right? So here we can see that this is a pretty strong move out, and therefore we can say that the order flow from the demand side or the buy side was very strong compared to the order flow from the sell side. So stronger the imbalance, stronger the order flow, higher the probability that there would be pending orders, unfilled orders or unfilled pending orders there in that basing zone or basing area. And that is one way of looking at it. The other way of looking at it is that the buying interest in that particular basing area was so strong that when price comes back, that price area is of real value to the value buyers, and therefore they're likely to buy there again. That's the second way of looking at these type of zones. So this is pretty good, right? And similarly, let us take a look at this rally-based rally demand zone. Again, rally, single base, and rally. So the rally candle is pretty good over here itself. So we look at the length of the candles, stronger the follow-up, and the length of the candle that moves out, stronger is the imbalance, right? And therefore, we can expect that a good amount of pending orders is present in that particular zone. So therefore, it is quite understandable that this is one of the quality factors that we take into consideration, right? So you can see what happened over here. Prices came back very near to this for the first time. It went up. Price again came back here. So there was strong buying interest or pending orders here, and then price again went up from there strongly, right? And conversely, if the move out from the basing area of the zone is very sluggish or very jagged, so the probability of that zone is basically for pending orders being there is lower compared to the one where the move out has got real good strength like this, right? Here it's on the bull side, these two, and here it's on the bear side, right? Look at the fall from here. Then look at the fall from here. So if I delete this, and if you take a look at this particular supply zone, this rally base, right? If I mark base to top, then look at the drop from there. Price went back there, again dropped, again went back there, again dropped, and now it's dropped for the third time, right? So this brings me to the second qualifier. Sorry, this is the supply zone. So let me just mark this with red color, slight red color, to denote that sell orders exist here. Anyway, so the second factor which I want to share with you that we consider is called the freshness of the zone. By freshness, we mean that after prices left the zone, has it been visited there or has the zone been touched? If it has been touched, like after prices went back here, it is touched once, right? So this zone is considered to be used, partially used, right? And therefore, it is not considered to be fresh. But till the time it did not visit this zone, it was considered to be fresh. So let's say if I go back in time and this day, I'm looking at the chart. So for this day, this zone is considered to be fresh. Why? Because so far, after leaving that zone, price did not visit that area again. So it's considered to be fresh. So price went back in, now it has visited the zone. Okay, it has sort of used up some sell pending orders, therefore it has slightly depleted the zone of the pending orders. Then price moves down from there. So now this state, when I'm sitting here on this state, the zone has already been visited once. So now this zone is no longer fresh, right? So when a zone is no longer fresh, it is considered to be depleted or lower in probability compared to the one that is fresh. But it does not necessarily mean that the zone is useless, right? See how for the second time again prices dropped from there, right? More sell orders or sell pending orders were unleashed from that zone again. So, so when considering a zone for taking a trade, freshness is definitely a factor. But with experience, you'll also understand that uh, it's not basically a factor which you should consider as written in stone. I mean, with experience, you understand that certain zones are very strong, and therefore, even if it is touched on departure or prices go there, you might even look for a second touch trade in those particular zones. So for that, you would need a lot of experience, a lot of screen time, and at least some years or a lot of months of practice with this particular style of trading. And then once you have achieved that kind of a level, you can judge for yourself that which zones you can trade for a second time back. And just to put some terms before you that we often use. So when prices come back to a zone for the first time, it's called first time back, or FTB in short form we use. When prices come back to a zone for the second time, we often, in our trading jargon, we call it 2TB or second time back. And if price comes back to a zone for the third time, it's called 3TB or third time back to the zone. But always remember, as a guideline, just as a guideline, we consider the first time back as the strongest one, right? The probability is the highest that orders are there and they haven't been depleted too much, right? Because a lot of zones, after they have touched it once, they often break. If you look at this particular zone, this liberatory demand zone, just see how the first time back worked beautifully, right? And the second time back, it broke. The zone broke. So that is why we say that FTBs are good for trading. 2TBs can be traded only with experience. So if you're a new trader, if you're new to this style of trading, I would say just stick to the fresh ones, like which haven't been even touched for once, and you're only considering the first time back to the zone. right? So only go for those zones. Only with experience you can look for 2 TBs. We don't trade normally 3 TBs or 4 TBs like this unless until you have mastered the art of confirmation trading. So for 2 TBs and 3 TBs, or second time back and third time back to a zone, we look for confirmation trades only. And for beginners, it is not for beginners as such, confirmation trading. But still, if you're interested, there's already a video there uh, in the channel called confirmation trading. So you can go and take a look at it. But I would suggest for now, if you're a new trader or new to this style of trading, just stick to the beginner series. And then once you have sort of mastered this, practiced this for a while, then go back and watch that confirmation. But really, confirmation is basically what we look for in our style of trading. So it is basically a necessary lesson, but it's slightly advanced in nature. So once you have mastered the beginner series or the basics one, and with some hours, sorry, some months of screen time and practice, then you go for the confirmation style of trading. For now, just watch and learn and see how price action unfolds in the chart before you across all time frames. Right. So in this lesson, we have learned about two factors so far: the move out from the zone. Remember, the stronger the move out of the zone, the better the zone quality is. Second is that if a zone is fresh, hasn't been touched, then it is considered to be stronger compared to when it has been touched already once or twice. Third factor, which we consider sometimes, and a lot of traders who use demand supply, uh, they are they are using this particular third factor to qualify a zone, is called the number of basing candles in that particular zone factor. So basically, what they say is that more the number of basing candles in a zone, weaker, or it is considered to be a less imbalanced area. So, like if you have in a zone, if you have 8 to 10 basing candles, they would say that it's a weaker zone, right? Compared to a zone which is just 2 or 3 or 1 basing candles. So that is what most demand supply traders they believe. But practically, from my own experience, I don't find it to be very true because I have seen zones which have multiple sort of basing candles, basing areas, and sometimes the imbalance just happens, and the move out is pretty strong. When price comes back, it again reverses very strongly. So some would disagree with me on this because they are from the school of thought that lesser the number of basing candles, stronger the zone is. So for them, this is definitely a third point. For me, the more the number of basing candles, weaker the zone, that particular condition is not a disqualifier for me. For me, the first two factors are more important. That is, how strong the imbalance or how strong the move out from the zone was, and how fresh the zone is. So these two are more important for me. That's my personal take on it, uh, from my own experience with this style of trading. But still, you should know this because a lot of people do follow this particular third point. So you should be aware of it, and you should make your own decision whether you want to use that third factor or you might not want to use that third factor. Personally, I don't consider the third factor to be very important. For me, if there are 10 basing candles, but if the move out is really strong, that means the imbalance or the probability of waning orders because the imbalance was there is pretty strong, I would definitely consider it for trading. So keep in mind these three factors, and also keep in mind that these three factors they look at the zone from the existing uh, zone structure perspective, right? How the zone looks like and how it appears, its anatomy, its components. In that fashion, it looks at the quality of the zone. But for a zone to be a high probability trading qualifier or not, there are additional factors, right? Like how price approaches to that particular zone, where the zone is located in higher time frames, right? So, for example, this is a daily chart of HDFC. This particular zone is located here on the daily time frame. So, once you gain experience, you will understand that the location of this particular zone within higher time frames like the weekly or monthly also plays a very important factor. Uh, so just for beginners, I'm not trying to confuse you, and therefore I'm not including those details. But definitely, I'll definitely have a new video talking about these high probability factors and what all things that you should look at before deciding whether a zone is qualified for trading or not. So for now, just stick to the first 3 points as in the beginner series, and definitely I'll come up with that particular video which talks about what are the additional important factors, like the location of the zone in terms of the higher time frames, then the location of the zone in terms of its potency. That's also a factor, like a zone which has broken, opposing zones, uh, is considered to be more potent compared to a zone which has not got any such achievement, so to say. Right? So this is also one important factor to consider. But again, this is for a separate video. So for now, just stick to the anatomy, the structural quality of the zones, if I put it that way. So those 3 points, keep in mind, and keep learning. And I haven't considered what topic to go for in the next video, but definitely I think that some of them I've already talked about in this video regarding how what are the additional factors. I might even come up with the additional factors in the next video. Let me just think over it and just think from the perspective of a new trader, right? So after so many years of trading, sometimes it becomes difficult for me to put on the hat of a newbie trader and try to understand that what they might be thinking and what way I should teach them this style of trading from an absolute beginner's perspective. So it's a bit challenging for me, but really I'm really happy that I'm able to share this information with you and you're able to embark on this beautiful journey of looking at price from a different perspective, away from indicators, away from a lot of stuff that we have already been fed by a lot of books and a lot of tutorials, this and that. So anyway, each system has its own merit, and whichever way you're comfortable, whichever method you're comfortable, I think you should use that and trade with that and make money with that. So all the best. Hopefully, in a few days, hopefully within this week itself, I'll be able to come up with the next part of this series. So stay tuned. And there is one more thing I would request from the viewers, that I wish I could, post charts on my YouTube channel itself, but I can't, because to do that I need the community tab to be activated, and I've just learned that it only gets activated when there are at least 1000 subscribers in the channel. So just to make a appeal to the viewers that if it's possible, please share the video and just help me to activate that community tab so that I can post prompt charts there, because making a video and then posting that, it takes some time. Uh, I would say it takes quite some time for me. But when I'm spotting an opportunity live in the markets, I can just take a screenshot, put my comments, and post it in the community tab. The way we do in Facebook and in all other social media. So there, that option is there, but only for channels which have 1,000 subscribers. So so far that community tab has not been activated because 1,000 subscribers are not there. So once that 1,000 mark is achieved, then they will activate the community tab, and I'll be able to post the charts and my comments on live opportunities or any kind of analysis thereof. So thank you so much for watching, and please subscribe, please share it, and all the best.